In the last bull run, I turned a small $2,000 portfolio into $5 million. And in this bull run, I plan to turn a few $1,000,000 into $15 million using these exact strategies that I'm about to teach you in this video. So you can literally just copy them and make your own first 7 figures. But you need to pay close attention because bull runs don't come along often. And if you don't, you'll end up missing the trend and an opportunity of the lifetime. Because last cycle, I was one of the few influencers who called the exact top of the market in 2021 and the exact bottom in 2022. But despite all of that, I had to start again from $3,000 because I had all of my funds stolen from me in the FTX collapse. But since the last bear market in 2022, I have made over $3.5 million, all within the span of 2 years now. So in this bull run, I'm going to show you how I plan to turn my $3.5 million portfolio into $15 million. And I'm going to bring you along for the journey too. And all you have to do is listen to the information that I'm about to give you in this video. But if you do not have at least $3,000 to invest, these strategies might not be suitable for you, because if you're worried about paying your bills or your rent or any other unexpected costs that may come along the way, it will add emotional pressure to your trading and it will seriously hurt you as you cannot afford to take risks. So let's get into the video.
So the reason why I broke this down into 3 strategies is because there are so many ways to make money in crypto, like so many ways. But I prefer ways that are evergreen, ones that work in all market conditions, whether we're going a bull market, bear market, or going sideways. I don't want my income relying on something that works for a few months and then just simply stops. That's fine for some people, but I want consistency to pay bills, to pay rent. It's not reliable enough to quit your job. You can go from making absolutely loads of money really quickly, and then if you quit your job, you have none. And I'm not the type of person to gamble my future on something that's hot right now. Things like staking, NFTs, or airdrops, they're not forever. Because let's be honest, airdrops are getting harder to find. They're getting more saturated and they do not come around often. If you're broke and you have all of the time in the world, sure, you might make a few $1,000s if you're trying to find the correct one. But I'd rather spend my time building real skills for the long run, for years and years and years, rather than chasing a quick buck. Things like NFTs. We all saw the 2021 mania. People were selling pictures of a rock for $1.3 million. That just goes to show how much more crazy the bull run can get. We haven't seen anything like this just yet. A picture of a rock for 1.3 million or 400 ETH. And we haven't seen anything like that yet. Logan Paul bought his NFT for $623,000 and now it's just worth $10. Justin Bieber sold an NFT for $70 million and now it's worth a lot less now. And the problem with NFTs is that they are extremely illiquid. They're in a market with way less buyers and sellers than traditional markets. So your assets become extremely illiquid fast. So even if you wanted to sell something at a certain price, somebody may not even buy it. Yeah, potentially you could buy an NFT very cheaply and flip it for 100 to 200 grand, but the NFT market has been going absolutely downwards in a bear market for the last 3 years. So even if it does pick itself back up, you've got to relearn the market environment because it's not like trading where you can repeat the same strategy time and time again. NFTs are literally just like buying art off the market, right? And other things like staking or mining, you need some serious money up front. Staking is like putting your cash into somebody else's farm to generate your returns, literally the same as a bank. But unlike the bank, you have no control. You are putting your own money into somebody else's farm and they generate a return, meaning you put your own money into somebody else's hands and you put up medium to high risk investment and you get a very low 10 to 20% returns if you're lucky. And you may as well just buy Bitcoin for that, for those returns. And the same with mining. It's pretty much the same. It's complicated, it's expensive, and it's a hustle to find the best projects when the current ones stop working. And the common problem between all of these is control. You don't control when the best airdrops come. You don't control when the NFT market will pop off again. Now, I'm not saying you can't make money with these methods. You absolutely can, but only for short periods of time. So if you do make money, great. Use it to change your life. And that's exactly what I will be doing when the opportunities come back around. I'll buy another car to go with my Aston Martin, or I'll buy another house or villa, or I'll make my family's future secure. But what I won't be doing is reinvesting back into NFTs and things like that. So that's me covering what I will not be doing on how to make $15 million this bull run. So let's actually get into the three strategies on how I will be making $15 million this bull run. Now, I focus on skill sets that are evergreen. They pay me no matter when the market condition. And that's why I've mastered trading and investing. Because if you apply the same core principles across the board, over years, you will make money. So, as I've mentioned at the beginning of this video, this is the same reason how I was able to have $5 million stolen from me, and then I was able to make it all back. Because I built skill sets that are repeatable. So, and you can only imagine how much more money we're going to make when the bull market returns. So, of course, these are some of the results that I've had in the evergreen skill sets of trading. As you can see here, January, I started the account with less than $3,000. And here in March, the account was sitting up over $500,000, all within the span of 3 months. I took a small account from $3,000 all the way up to $500,000. And this is the account here. I took this same $500,000 here, traded it all the way up to just over $5 million. And then I had it all stolen from me in the FTX collapse. And then I started again. I put a tweet out saying that I had 3,000 euros left to my name, and I was able to trade it all the way back up to over 3.5 million within a few years. And this is the thing. With trading, many people think it's dangerous. Oh, trading's dangerous. Leverage is bad. You can lose it all. Well, I always think this comment is quite naive, because yes, you can lose it all, but you don't actually need to put yourself in the position that you should lose it all. And you do this by starting small. As you can see here, I started here with a small $2,000 account. Took it all the way up to $500,000 in 3 months. And I do the same with my 1 to 100k trading challenges in my private community for other people to follow along. So you absolutely can. Each time I start with a small amount. Each time I wait for a specific market condition and take trading setups that I like. And here's the thing, you only need to be right once. Even if you're wrong once, twice, 3 times, the time that you are right will make it all back and more. And I'm being 100% serious here. And the difference here with trading compared to NFTs and things like that, you do not need to wait 2 to 3 years for the market to go crazy. You have all of the control because you decide when you take the trades, because the markets, such as trading, are extremely illiquid. There is always buyers and sellers. Whereas in NFTs, there isn't always buyers and sellers. Sometimes the buyers completely evaporate, but the sellers are always there. So there might not be somebody buying whatever you want to sell. So trading is all about skewing the probabilities in your favor. Imagine a casino, right? You never see them going out of business because they have the odds in their own favor. They have risk parameters in place, and as I said, the odds are in their favor. So you need to think of the markets like a casino, and you need to beat them, and they can be beaten. Putting the odds in your favor, that's when you only enter the market when you see what you want to see. It's your choice to enter, and you put in a level of risk that you're comfortable of scaling in. So that brings us to the trading scenarios, because there are many ways how you can trade, right? So I'm going to go through them now, and you can scalp, okay? Scalping is where you trade the 1 minute time frame or the very, very low time frame, and you make money. So as you can see here, this is the daily time frame here, daily. Let's go all the way down to the 3 minute and then the 1 minute. This is when you're trading very, very small, volatile movements in the market. You're trading between here and you're trading between here, and you long down here and you just take profits here on very, very, very small price movements, okay? You add up, and you take a lot of volume in your trading. Now, the problem with this, I do not recommend scalping at all. The reason being is because you need sharp psychological skills and very, very quick thinking. Because, let's show the example here. This is the 1 minute time frame, okay? As you can see, this happens over the span of 20 to 30 minutes. It's long enough for you to switch off, but it's not long enough for you to be allowed to switch off. You can long this here. If you work a job, I do not recommend doing this. If you work a job and you long here, or you long in this area here, you come back after, say, 15 minutes, your boss comes to you, tells you need to do something, you've taken your eye off the ball, you longed here, you wanted to take profit here, but you are not able to, prices back down here, so you've got to close at break even and things like that. You need to be on the ball at all times. You need to be constantly watching the charts for if you are scalping. And that means that you need a constant mental edge. You need to be fully focused on it. If you're taken off for a split second, then you could mess up your whole process. And that means that it's very, very time intensive too. And the whole purpose of trading is you don't want to create another job for yourself. You want to make as much money as possible over the little time as possible. Now, scalping requires all of the time and all of the volume. So that means buying and selling a lot. So what I like to say scalping is scalping is like a homeless person begging for scraps on the side of the road. Oh, please market, give me some money today, right? Now, if you're going to scalp, there are quant traders that go do that. And I'm not a quant trader. So quant traders will scalp, and I've never ever met a human that scalps for a living. People say they do, but I can guarantee you they do not make a lot of money, especially if they're hiding behind an anonymous profile. So that is why I will not be scalping, and I do not recommend it. It's all of the time for a very little amount of reward. That brings us to day trading. I'm sure you've heard of day trading before. Here, day trading. Now, this is good for cash flow. You make some money. You make money week in, week out. And I like to use this to pay things like bills and things like that. So that's good for paying your bills. And that means you do not need to touch your spot bags, okay? Because as I'll explain in a minute how they take time and things like that. However, day trading is not trading every day. You do not need to take a trade every single day. You take one trade in the week and then take the rest of the time off. There's no need to be taking loads and loads of trades. Day trading is not everyday trading. You take a trade across a few days and then you close it. That's what day trading is. Or you can take it within the day, that's fine as well. Just depends on the market condition and the market setup. And as I said here, day trading depends on the market conditions. Now, day trading will work in a very range-bound environment. Let's say the market's moving like this, sideways, before the market starts to pump and goes a lot higher. This is when day trading does its best, but your spot bags and swing trading will not be performing that well. So then once price breaks out of this range and goes a lot higher, this is when your swing trades and your spot bags make the most money. The reason being is because when the market goes vertical like this, day trading, it doesn't give you that many opportunities to get on board the trend. Whereas when you're in here, there are more opportunities to trade in this area here. So some people are better at day trading, some people are better at swing trading. I personally think that you need to get good at both in order to become the well-rounded investor. And you make the most money that way. And you print in all market conditions. And that's something that I am very good at. Now, this day trading is good to accompany other accounts, such as your spot bags, etc., etc. And as I said, one will work better in one market condition, and then the other will work in another market condition. Now, to go over the specifics of day trading, I have made a video about that already, going over the exact strategy that made me $5 million. So you can go watch that there. That goes into the exact strategy that I use if I'm day trading or swing trading, and you can pivot across the market conditions. And that's how you can pivot across the different market conditions. So I've already made a video up on that. Now, that's day trading. This leads us to swing trading, okay? Everyone can swing trade, okay? Everyone. There is no reason why you shouldn't be swing trading. It doesn't matter if you're a beginner or expert, everyone can swing trade. The reason being is because it's less time intensive. Now, swing trading is taking a trade over a longer period of time and you catch a larger swing move. That's the whole point of the term. So as you can see here, let's say, as you can see here, the market's ranging. You look to accumulate your swing trade position in here. Let's say you've got a bullish bias, you start to long in here, you start to accumulate your position. You look to cut on a clean break below this range. This is the range high, this is the range low. Because you are anticipating the markets to move up, you accumulate when it's low. You are literally just buying low here and then selling if we break below the range because you are bullish. You think this range is going to hold. And then the market, you just accumulate in here. Your stop loss will be below the low here. And then obviously the market breaks out and then you look to scale out of this position up here. So that's swing trading. You take a trade over a few weeks, a few days, a few months, a few years, right? Now, the reason why I said a few years is I'll come on to the point in a minute, but it's less time intensive. It's less time intensive. You can just accumulate it here. You know where you're wrong, you cut on a clean break below, or vice versa, you can flip it. Let's say if you're short up here, you accumulate shorts in this area here, you cut your shorts on a clean break above, and then obviously the market moves down. So that's the kind of swing trading strategy. It takes time to play out. And this is why people with jobs say they should scalp, because they think, I need to get out of my job fast, I need to get out of my job fast, so I must trade fast, right? Which you can, sure, I'll explain in a minute. But swing trading takes time, and it's less time intensive too. So this is why it's good for everyone to do. And it's the least technical. Scalping is the most technical. Day trading is somewhat technical. You can be a little bit iffy with that. You can move the lines a little bit, but it's still very, very technical, I would say. But swing trading is the least technical. And you can be technical if you so wish, but you don't need to be. That's what I'm saying here. So you don't need to be precise in your entry. As I said, you can accumulate in this area here before the market moves up. And I know that the most money is made in swing trading. The most money is made in swing trading because people like Michael Saylor are buying Bitcoin with the time horizon of years and years and years and years. He's buying Bitcoin to now because across years, because he anticipates the price to go up over a long period of time. He can be patient. He doesn't need to do things right now. He doesn't need money right now, right? So hedge funds as well, they make most of their money on swing trades that take and play out over the course of a few months. The reason why I say this will become clear in the next strategy. But if you are smaller, you can probably focus on day trading to get the money up and then pivot to a swing trading style. But you need all of it to become a well-rounded trader and investor. So there's some things to note here. As I said, you need to use all strategies. Now the problem is people are tricked thinking that you must pick one. You must pick one and stick to it, when that's not the case because the markets are always changing. So you need to pivot your strategy accordingly. And this way we make money all year round. Because if you're gonna buy a coin, right, with a swing trading style, well then there's no point in buying the coin if a bear market is about to come because it's about to break down. So you need to apply a different strategy if a bear market is about to come. If the market is going sideways, then you need to apply a different strategy there. Or if a bull market is about to come, you don't want to be selling all your spot positions. So each market condition needs a different strategy. Otherwise it'd be easy to make money, right? The reason why it's hard to make money in trading is because the market conditions change all of the time. So you need to pivot accordingly. So in order to make $15 million this bull run, what I will be doing is I will be taking trades, day trades in this portfolio here. I will grow this and then I will compound on this account, scale it. And then you put the money into swing trades. And then you also put this money into spot backs. Okay, so that's how I will be making $15 million this bull run using these strategies here. And this is very, very similar to the 1 to 100K trading challenge that I do. And this is going to become clearer now, which brings us to the next strategy, token holding. Now, this is also very, very similar to swing trading, very similar. And it is also where the most amount of money is made because all you have to do in this is buy low and sell high. You are literally just buying a token. You buy a token low, you anticipate that the token is going to go higher, then price goes up, and then you sell the token when the price is higher. Okay? But the difference here is that you need a lot of patience. I have called countless 2x's, 3x's, 10x's. But the problem here is that it takes time to play out. I called FET and it did a 15x here, but it took 6 months to play out. I called Pepe here at pretty much the all-time low, and before it did a 12x, and this took 3 to 6 months to play out. I also called TITS before it did a 500x, and this took 3 to 5 months to play out. Each time these trades take time to play out. And that's exactly what I was saying earlier. Most people do not have the patience to sit and hold for 6 months, especially if they're working a job. That's why they go, oh, I must scalp because it's quick. They don't have the time to allow things to develop over 3 to 6 months. Now, the reason why I say this and why this strategy is so powerful is because if you start with a small amount here, 3,000, let's say you start with $1,000, okay? Let's go conservative. $1,000. Don't know where that circle's just disappeared. Anyway, $1,000. You start with $1,000 and you pick a coin that does a 3x. You now have $3,000. But the caveat here is you've just wasted 3 to 6 months. Wasted 3 to 6 months for this to play out. You waited 6 months to make $2,000. Whoop-de-doo, right? You may as well have done some overtime at your job. Now, the reason why I say day trading to scale up your account first, like I do in the 1 to 100k trading challenges, is that you can scale up an account pretty quickly. For example, here I took an account from less than $3,000 all the way up to $500,000 in 3 months. That was using the trading approach, right? So then what I do is I scale this up through day trading to here. Let's say you scale the account from 1,000 to 30,000, okay? Now you've done a 30x, taking multiple trades, day trading, not scalping, okay? And catching movements. So then what you do now is you take this money and you put it into token holding. So now instead of putting 1,000 in the token holding, the coin does a 3x over 3 to 6 months and you make $2,000, you put say $10,000 to $30,000 in. Now when this does a 3x, you make $90,000 over 3 to 6 months. Now, all of a sudden, this is appetizing. This is something that you can do, right? Now you've done less work and you've made even more money than you ever would before. So this is why this strategy is so powerful, because you scale up the trading account here to 30,000, and then you put that into token holding, and then you can make the real big gains here. You've done the same amount of work as you would have done with this 1,000, turning it to 3,000, but instead you did the trading before, you scaled up the accounts to 30,000, you put it into token holding, and now you've made $60,000 from 30,000 to 90,000. So that's how token holding is extremely powerful after you've done the trading. So but then I say all of that, how do you actually buy low and sell high? It's easy to say, yeah, it's easy to buy low and sell high, but how do you actually do it? How was I able to make 15x on FET here? Well, let me go to the chart. As you can see, this was the FET chart. So step 1, the reason why I picked FET was because it was a coin that was on narrative and that was hot. Now, what do I mean by on narrative? It's something that everyone was talking about. Currently, in 2020, at the end of 2024, and I think 2025, it's going to be meme coins. Meme coins have all of the hype and the speculation. Now, at the time when I chose some FET, it was Bitcoin layer 2s and AI. AI was super, super hot. So that's why I chose FET, because it was in the category that was extremely hot. And then what I did is I took the spot coin that was on narrative, and then I used the technicals to back it up. So I had the fundamental analysis of something that everyone was talking about, and then I backed it up with the technicals. So as you can see here, it was in accumulation. This is the same area that I was accumulating in the image before. As I just previously mentioned, this is an area where you want to be accumulating your spot bags while day trading. Then what happens is it breaks out and then it goes into a trend. This is when your spot bags, your token holding supersedes the trading, and you will outperform your trading portfolio with token holding. As you can see, I just accumulated here and it moved all the way up to $3.50. And then you start to scale out in this area here. After a large move, you scale out the position. You don't do it in one go, you just scale out on the way up, because you are highly unlikely to time the top. People will sell this thinking they've sold the top, and then it goes up even more without them. So you don't just go fat finger, one sell. You just scale out the position. Because if you scale out, it allows this here to pull back and then go higher. So if you scale out, you have a much better return on your investment. Because if you just go one sell, you enter once, you exit once, then let's say if you exited here on this pullback here, because this wick was a fat red candle, let's say if you panic sold here, you would have then been kicking yourself because you missed out on literally another 2x on your, say, 5 to 7x. So that's the 14x there. So that is why you pick a coin that's on narrative and then use the technicals to back it up. As you can see here, I accumulated in the grey box. I added the position as we broke out, and then I waited for the trend to play out. You also had this SR level here. As you can see, what happened? Resistance here, sell off, resistance, breakout, support, time and distance away, support here, time and distance away, support here, broke below. We accumulated in this area here. That's an accumulation range. We had a rally, and then we had a pullback into the accumulation range. We made another one into a key SR. We spent time and distance away, back below, into a new accumulation range. This is where I was doing my buying in this area here, accumulating for the next leg up. So I picked the coin that was on narrative, and then I used the technicals to back it up. The same with Pepe here. As you can see, I said here, if we get this area here, then Pepe will go to all-time high. So let's go to the Pepe chart. So as you can see, this was the area I said if we come back below this low here and get back inside, Pepe will go to all-time high. That's what I said. I said here, if we get below this low here and get back inside, what I mean by that is we've broken down below the low, take off the magnet. If we come back below the low, gets back inside, Pepe will go to all-time high. So once it came back below, I did some small spot buys underneath here. Then once it got back inside here, this was where I was accumulating the rest of my position in this area here, because we took out the low, got back inside. I was accumulating in this position here before Pepe ended up doing a monster move to all-time high. Ended up doing a 10 to 20x, depending on how you scale out your position, as I just mentioned there. If you just fat finger sold here and it pulled back, you'd think, oh yeah, I've done a good job. But if you scaled out your position here, let the rest run, you can then scale out the position and make even more money. So you just scale out the position. Don't do it all in one go. So as you can see, that's how I was able to, and as you can see here, it goes even higher, which I'll cover in a minute. Now, as you can see there, how that system is so powerful. If you're starting with a small amount, you scale and compound your trading accounts through the trading. Then you take it and put it into the token holding and then make even more money that way. So the markets move in a typical market cycle, right? You have the accumulation here, you have price breaks out, it trends higher, and then you move into another consolidation. Now, here is a massive difference where people go wrong. As you can see, we went into another accumulation here on Pepe before it broke out even higher. Before, over the course of a year, this took a year to play out. It did a 25x then, okay? So if you want the larger returns, you have to be extremely patient. You can't just buy something and expect it to next week just do a 10x. It takes time to play out, 3 to 6 months. Unless you're going to just buy this bottom bit here and sell that there. But then even then, you've just missed out on even more gains, okay? So there's one thing to note. We go into another consolidation here. Sometimes it breaks down and goes lower. Sometimes it goes into reaccumulation and goes higher. Now, this is a very important lesson that I needed to learn when I first started trading years and years ago. Now, I first started trading, I sold Rune for a 5x, okay? So what happened is I was accumulating Rune down here, underneath $2, all the way down to 50 cents. I was accumulating it in this region here. As you can see, this was the consolidation there, right? There's the high and there's the low. I was accumulating in this consolidation here. We broke out, we retested that accumulation, and then we ran higher. So I caught Rune in this area. It made a 5 to 8x, okay? 5 to 8x. And then I sold too much in this area here, which was, I thought was smart at the time. But as you can see, Rune carried on reaccumulating higher before it ended up doing a 27x in total, okay? Whereas other coins, such as Aave in the same DeFi category, sold off here. They went into distribution and fell off. But because I picked the strongest winner, I missed out on a lot more gains, right? So one thing to note is do not fade strength in a bull market. Do not fade strength. If something is strong, do not fade it. What people do is they have too many coins. They have some coins that are winners and some coins that are losers. And what people will do is that they'll sell their winners to cover the losers because they anticipate that the losers will catch up. But this isn't the case. Losers don't usually catch up. What actually happens is losers will lose more, and then the winners will win even more. So now that they've sold their winners to cover their losses, they end up actually in a losing position. So that's something that you do not want to do and you want to be cautious of. So do not fade strength in the markets. Now, there are many differences. So this is a reaccumulation here. As you can see, we've moved up. I don't really like to say this is nothing to do with like wick off or any of those strategies. It's just the way the markets move. Okay, I have my own strategies in deciding which one is which. So this is reaccumulation here. We then break out of this range higher to go higher, and then this is distribution. So this is a lot more heavy in price, and then price breaks down and goes a lot lower. There is a lot of differences between the two, and you can spot them. You absolutely can. But that is a future video that I will cover. So you need to understand the difference between reaccumulation and distribution and the strength in the markets. More often than not, if the coin is very, very strong, then it will be reaccumulation. Okay? But there is also another problem most people have, is that when the trend starts, they are not that confident. They are not that confident in their positions. So let me go back to the Pepe example. As you can see down here, most people are not, if the chart is like this, most people are not confident in going in hard and aggressive. When price is down here, people are not confident because price is down, right? Price is down. Oh no, price is down. Is it ever going to recover? And this takes time to play out. It's easy to now spot and say that it's gone up. But as I said, this took 3-4 months to play out. And then for the pump to even happen, it was another 3 to 6 months. Okay. So this takes time to play out. And there are other coins in this period going off, moving, highly volatile. Whereas you think that there's other noise elsewhere, right? So what you do is you buy this, you get chopped about, oh, my coin's not doing anything, and then you move on to the next one. So you're not that confident here. You leave some in there, but somebody else has told you to go buy this one. So you sell your bags here, and then you think you've done a good job because it's moved down. And this is a highly volatile coin, right? You're down 30-40% if you bought here. But then you sold some, you aren't allocated as much as you wished. So then now price starts pumping. You are right on your idea. You've now made some money, but you've not made enough. And you compare yourself to how much you previously had. So you go, I should have had more money. So what happens is now you're confident to enter because there's green candles. But before you weren't that confident. Now things are moving, you're now confident. You're like, oh yeah, I'm right. I must be right again next time. So what they do is that they buy more up here. You put more money into it at the top because now you're fully convicted. And then price goes down and now you what should have been a winning position, but because people lacked patience and time, because they couldn't afford to take risks, they put too much money up here and now they're down on their position. So what you need to do to counteract this is to have conviction and bet hard originally. And that's hard to do. So people get confident at the end of the trend. So what you should do is bet hard at the beginning, at the start. So that is how I will use this information to make 15 million this bull run. We also like to buy new coins. So we'll scale up our trading accounts, move it then into token holding, bet hard, bet a lot, and you make a lot more money. So there's one more thing to note here, that new coins perform a lot better than old coins. As you can see here, Rune is an older coin. This was made in 2020. Had its 25 to 30x here, and then it's fallen down since, okay? We then go from this area here, and we've made a 3x this cycle. 3x is not that bad. Whereas if you move to Pepe, Pepe has done very, very well so far, and it's gone from down here all the way up here, and it's done a 20x this cycle. So new coins always outperform old coins because old coins people are holding from previous cycles and that they sell on any pump. So there's a lot more sell pressure. Whereas new coins, the holders are filled with hope and optimism. They go, how high can this go? So old coins usually perform a lot better. That's how we will make $15 million this bull run using trading, token investing, and then that moves us to strategy number 3, meme coins. Meme coins have their place, right? Now, utility tokens have about 1% use, right? They promise, and then the rest of it is all hype. It's all promises, fake promises. But most of the time, they never end up delivering on that 1% of utility anyway. The rest of it is hype. Whereas a meme coin is 100% hype, how much can people talk about this? And meme coins sure do deliver on their hype, right? So they deliver on their 100% of what they are. They're all hype. So if a meme coin is 100% hype, then they deliver on that. Now, I've already made a video about meme coins, so you can go check that one out. However, we'll cover it here. Community engagement and relatable ownership is everything about a meme coin, right? Relatable ownership as in, how does this make people feel? Now, if you have a weird and obscure coin, like let's say Giga, right? I'm not picking coins and I'm not funding them, but something like Giga is only relatable to a certain amount of people, mostly men on the internet who understand Giga. It doesn't understand everyone in the pub, right? If you go down to the pub and you speak to everyone in there, they will not understand the meme Giga. Whereas if you say, look at something like a dog coin or a cat coin, such as Popcat or Tits, you go down to the pub and you tell the people in the pub about this, they'll go, oh yeah, it's a cool cat. It goes pop, 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 pop. Or Tits, they go, oh yeah, we love Tits, right? They are understandable across everybody. The audience is bigger. So the relatable ownership is the audience is a lot larger and the community engagement will be also a lot larger. So it's all about how many people are interested in that token. And that is how you spot whether a meme coin is going to be good or not. And the number one meme coin setup is this here. Exactly. It has its pump here. It has its pump. It then comes down. It then goes into a consolidation. It breaks out. It retests. And then it goes higher. This is the exact setup on Pepe here. Now, I'm going to use Pepe only as the example. If you want more examples, go check out the other meme coin video. But as you can see here, Pepe, this would have had other information beforehand. Just this exchange here, Binance, this would have gone like this, like here, okay? And this is the number one meme coin setup. It has its pump, it pulls back, it then goes into a consolidation, and it holds here, and then it breaks out. This is the area here where you want to be getting on board. Now, you must apply different meme coin strategies depending on the market cap of the coin. So Pepe here is a different example compared to other meme coins. If you're going to try apply this strategy to something that has a 100k market cap, then be very cautious. But I explain more in the meme coin video that I've already made. So I'm just showing you here the number one meme coin setup because it has its original holders. They've bought down here. It's had its run up. Some people take profits up here, which leads to the coin selling off. Then, but because the original holders here are still holding and the people are still buying in this area here, it means that we consolidate for a long period of time. Some people are panic selling the bottom, people are reaccumulating, and then after a long period of time when the sellers are exhausted, price breaks out here and then price runs higher. And then all of the previous people that panic sold in this area here now rejoin back on board, adding more fuel to the pump, more FOMO, which leads to these mega candles here. So that there is how I will be making $15 million this bull run. You take the profits from the trading account, you move it into token holding and some meme coins, because meme coins are generating very large returns. So that's exactly what I'll be doing for the entirety of this bull run, using that exact strategy there. Now, if you want all of my trades, all of my specific trades, all of my specific token holdings, then you can go and check out my private trading community in the description below. I have made countless of millionaires inside, and I've made so many people six figures that I've lost count this bull run. So if you would like to join my private trading community, you can go and check that out in the description below, and then you can copy the exact trades and the exact tokens that I'll be holding to make $15 million this bull run, and how you can make your first 6 or 7 figures yourself. So I hope you enjoyed the video, and I'll see you all later.